Well, this will be our entry point. It comes like this, and this is a proper setup according to our setup. If you go forward, price moved like anything, right? So we will exit whenever we get a first bearish signal. So this is the first bearish signal. This is kind of bearish engulfing. We will exit the trade here. We got the confirmation here, higher high. We got the confirmation here, lower low. So in this case, we will check what happens. We will this will be our stop loss. This is the and we will exit whenever we get a first strong bearish symbol. It's going up, it's going up, 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 going up. I think we are exiting here because this is a bearish engulfing signal. If you are tired of staring at charts all day but still want to make consistent money from the market, this video is for you. This type of trading is the sweet spot between freedom and profits. You don't need to be in front of your screen 24/7 or even during the market hours. You just need the right system and a plan that actually works. In this video, I will show you exactly how to swing trade like a pro even if you have a full-time dedicated job. We only need 30 minutes after market hours to screen the stocks and 5 minutes in the live market to place the trades. I will also explain some screeners to shortlist the stocks in this video. My new book, Options Trading Made Simple, will be released next month by India's leading publisher, Jaico Publication. So keep an eye on this book on Amazon or when you visit a nearest bookstore. So without wasting much time, let's start. Whenever I explain a trading strategy, the first question I get from people is, Indra, the strategy is very good, strategy is fine, but how to shortlist the stocks based on the strategy? That's the question or usual comment I get for most of my strategy videos. So I'm telling you in advance, friends, I will be sharing couple of screeners to shortlist the stocks based on the strategy at the end of the video. So don't worry, I will share the screeners information. Okay, this is one simple information which gives all the stocks which fits under the criteria. So don't worry about the screener part. Okay, now we go ahead. One is we need to understand there are different types of trading. Okay, so it is based on the holding period, for how many days or for how many hours we will be holding the trade. Based on the holding period, we can divide the trading into intraday trading, BTST trading or STBT trading, swing trading and positional trading. Okay, it's very simple actually. In intraday trading, we will take the trade on the same day, we will close the trade on the same day. Okay, so that's intraday trading, very simple. Next, BTST or STBT, which means buy today, sell tomorrow, or sell today, buy tomorrow. So that's called as BTST trading. So in this case, we will we will take the trade today, but we will close the trade tomorrow or maximum day after tomorrow. Okay, so that is called as BTST trading. So in this pattern, we will try to take the advantage of the, in case of any gap up or gap down scenario. Also, we will try to take the advantage of the decay in weekly option selling. Okay, for those kind of people, BTST or STBT trading suits a lot. Now, swing trading. Okay, anywhere between 1 week to or maximum 2 days, 2 3 days to 1 month holding period comes under swing trading. Okay, so intraday trading, we will take the trade same day, we will close the trade on the same day. BTST, we will take the trade today, we will close the trade tomorrow or day after tomorrow. In swing trading, we will hold the trade anywhere between 1 week to 1 month. Okay, so that is swing trading. Now positional trading is if you hold the stock or if you hold the trade for more than a month, that comes under positional trading. I hope these four types are very clear. In this video, we will completely focus on swing trading, which demands very less time, maybe 5 minutes in the live market hours to place the trades or to place the stop loss orders, and we need maybe 30 minutes after market hours, maybe in the evening or maybe in the night or maybe early morning next day. So after around 30 minutes to shortlist the stocks. Okay, so we'll focus completely on swing trading. This is highly beneficial for the people who have a day job or a business on their own business, who can't dedicate time in the live market hours. Okay, so this is very clear. Next is, we have three trading instruments in the market. So equity, futures and options. So as part of the swing trading, we can take the trade in equity. There is no problem. But in the long direction, because as of now, at the time of recording this video, taking or carrying short trades for more than one day in equity, is it's not allowed actually. Even some brokers allow, they might come up with some restrictions. So those are all headaches. Okay, so in at this point of time, swing trading you can do in equity in the long direction, which means we buy today, maybe sell after 2 weeks or after 3 weeks or after 1 month. Okay, that's possible as of now. Futures, yes, it is possible to take the swing trade in futures both in the long direction, both in the short direction. However, futures demands more margin, right? And also there is a risk of gap up open or gap down open against your position. So if you are taking trade in futures, it is comes under hedging. Okay, you need to know the hedging part also to take the trade in futures. That point I will not be covering in this video, because that's altogether a different, a big topic to cover. I might cover in the future as well, but that's a different topic. So as per this strategy, you can take trade in equity, you can also take trade in futures, but it comes under, you need to know the hedging. If you know hedging, then only you can try, or if you have more margin, if you know hedging, then only you can try futures. Otherwise equity is good. Now options, in options we have options buying and options selling. So as part of this strategy, options buying will involve time decay risk, right? So option selling is allowed. Okay, if you know option selling, if you know the risks in option selling, if you know hedging in option selling, you can do option selling as well as part of this strategy. However, equity is very simple, very straightforward. Whatever I'm going to explain the strategy, it works perfectly with equity. So to work with futures or option selling, you should know the hedging part. I have made several videos on hedging. You can check my timeline, okay, on my video channel. I have made several videos on hedging also. So if you know hedging, then only you can try with futures and options. So let's move forward. Now, as I said earlier, swing trading is holding the trade between 2 days to 1 month. Okay, so we technically pick a concept. Okay, we technically pick a concept which offers the trade entry and exit with a holding period greater than 2 days and less than 1 month. Okay, now technical analysis is a very very vast field. There are so many indicators, there are so many concepts are there under technical analysis. I will be picking one simple indicator under trading concept which fits under this swing trading concept. Okay, now we'll move forward. So you might be wondering why I have mentioned 40,000 rupees here. So I think couple of years back, maybe 12 years or 13 years back, I used to attend almost all the mm, trading workshop on the weekend. Okay, around 10, 12 years back, we didn't had the concept of online webinar or meeting. Those days the Zoom was not very popular. So I used to attend weekend workshops most of the time. So as part of one such webinar, that cost was around 40,000. If you remember, or if you recall, 40,000 is a very huge amount 12 13 years back, right? So I paid close to 40,000 rupees to learn this particular concept, but I will be sharing this particular strategy for free as part of this video. So if you think, not right now, but if you think this video added value to your time, you can like the content, you can share this video with your friends, and you can also subscribe to my channel. Okay, Now we'll go ahead, okay? So we should not waste more time. So most of you know uptrend, right? In uptrend, what happens is price keeps on going like this, okay? It goes on like this, which means if you consider this as a high, if you consider this as a high, this is a low, so this is higher low, right? Compared to this low, this is a higher low. Similarly, when you compare to this, so this is higher high, right? Now I don't spend more time to explain this. You might be knowing this, right? So now you should remember one thing: whenever you take a loss, even the loss may be 1000 rupees or 2000 rupees, even the 500 rupees loss, you need to realize one thing, friends. It gives some pain, right? Definitely it brings some hurt. You will feel bad, definitely, right? So definitely, I don't know about you, but definitely I feel bad even if I face a small loss. It hurts me. So whenever I pick a strategy, I will ensure the accuracy or the safety factor will be very very high, because whenever if I'm making more successful trades as part of the strategy, i will I will be confident continuously to take the trades under that system. Okay, I hope even you belong to the same category. So if that is the case with you as well, it makes sense to take the trade in the direction of the trend, right? Let's say there is a trend, already established trend in a particular stock. Then if you take a long trade anywhere, uh, there will be higher probability of success, right? Now, what we do is, as part of this strategy, uh, we will identify a stock which is already in uptrend, and we will see when it gives a pullback, and we will use certain technical concept to make the entry here. Okay, so exit is different and entry is different. So as part of this strategy, I will be covering both entry, stop loss, and exit. So we use simple one technical concept to know the entry part. Then exit I will cover in the end, because you if I explain both entry and exit together, you will get confused. So initially I will cover entry and stop loss part. At the end I will cover exit part. Okay. Now this is all about the uptrend, right? Now if I go forward, similar to uptrend, there will be downtrend, right? So if the price keeps on goes like this, suppose if you consider this as a high, if you consider this as a low, compared to this high, this is a lower high, right? Similarly, compared to this low, this is a lower low, right? Once again lower high, once again lower low. Now I don't want to continue explain this because this is very very basic. Now, as part of this strategy, as I said earlier, you can also take the trade in the downside direction, short trades. However, as part of Indian regulations, you can't carry short trades for couple of days in equity, right? So that's why I don't focus much on the downtrend part. Okay, so if you're really interested, the concept is very very simple. I've written a detailed article about this also in my website. So if you still want to know, I will share the link in the description. You can go through with the description. So as part of this video, I will be covering more about how to take a long trade. Even for a short trade, the concept is a little ulta. Okay, so I have covered it in the article. You can check the article. You will get to know everything. But at this point of time, I will cover in depth about one side, how to take the long trades. Okay. Now, if I go forward, as I said earlier, right? So there is a problem. Okay. For example, the price keeps on going like this, right? Now, what I'm trying to say is, whenever it gives a pullback, we will take the trade here. But there is a risk here. Let's say you have taken a long trade here. You have taken a long trade here. But what is the guarantee price will move up from suddenly here? It might go a little bit downside. It might hit my stop loss. Then it might go upside, right? Or it might go downside as well. There is a possibility. Or it might hit my stop loss. It can go sideways as well. All the possibilities are there. So this is the risk with this trade. However, however, we should have a solid technical confirmation before going for a long trade, right? We should have some support. Okay, maybe some support in the form of indicator, maybe some support in the form of candlestick patterns, right? We need that confirmation. Whenever we get that confirmation, uh, I mean, when I say support, it is not only the support in terms of price, it is support in terms of emotional also. Because let's say you are using an indicator here. So let's say the price came here. So indicator is not giving the buy signal, which means you can wait, right? You can hold. Okay. So whenever the indicator gives the buy signal, then only you can take the trade, right? So in this case, it gives an emotional support, and it also help you to avoid many unnecessary trades. If you remember, most of us, okay, I will include myself as well, because I have done this kind of mistakes in the past. Most of us, we lose majority of the capital or entire capital in one or two such revenge trades, right? We will take a trade, it will hit the stop loss, we will keep on adding our position, and after some time entire capital will be wiped out, or majority of the capital will be wiped out, right? We have done such kind of mistakes. So whenever you use some support in terms of indicator, or in terms of candlestick confirmation, it will help you to avoid those bloody unnecessary trades, right, which brings the losses. Okay, so that's where this strategy gives an edge actually. Okay, so going forward, you will see, or you will learn how, what kind of edge we get it in the system. Okay, now we use RSI indicator. I use RSI indicator to use this. Okay, so but definitely don't assume I use the RSI indicator as it is. I use RSI indicator in a different manner. Okay, I will cover after some time. So I will use RSI indicator in a different manner to manage the trade. Now, when I say RSI indicator, there are two popular concepts are there in the technical analysis world. One is overbought and oversold, and another one is divergence. So when I say overbought and oversold, whenever the price reaches, the 70, the RSI reaches 70, people say it is overbought situation. We need to take the short trade. And whenever RSI reaches 30, they say it is oversold, take for the long trade. Okay, that's all about overbought and oversold. Don't worry, I'm not using overbought oversold concept. Another one is divergence. Okay, so I will not be using both the things. Okay, definitely this is not as part of this video. So I will give little information about divergence, and I will also explain how this divergence actually fails and brings more losses, and then I will cover how to use the divergence in a different way. Okay, now if I go forward, recently I got this comment from one of my subscriber. He said because I shared a video where I made a biggest trading mistake, and instead of making very good profits, market was giving me profits actually, but I took a loss. I took a loss in that particular trade. I made a detailed video on that particular topic, and that was available only for the members who opted for my YouTube channel membership. And he was a little surprised. He said, we often see teachers and masters as if they never make simple mistakes, but this clear bearish engulfing pattern was easy to miss when greed took over. Thank you for sharing your experience. Okay, so I mean, I don't see any greatness in this because that was a mistake because assume I have opted for a long trade. There was a big bearish engulfing on the 50-minute chart against my I trade idea. So whenever I see a bearish engulfing, if you don't know bearish engulfing, it looks like this. For example, this is a bullish candle. The first candle is a bullish candle, and the second candle will be green bearish candle. The second candle looks like this. Okay, it will be bearish candle. It's a big bearish candle. So let's say you've taken a long trade from here. So whenever you see a bearish candle, you should trial your stop loss or you should exit here at this point of time, right? It doesn't make any sense to hold the trade, here, right? So that is a mistake I committed. So I was long from here. At this point of time, I know I market was giving me profits. So instead of booking profits, I added my position long trade once again, and I used to, I mean, at the end of the day, I booked a heavy loss. Okay, so that's the thing I shared. So even I keep on sharing my losses also in for my members. So if you want to know, how the real trading works in the live market, or how we go through with different sort of emotions in trading, you can plan to subscribe for the membership of my channel. The link is in the description. Okay, now we'll go forward. So when I said RSI divergence, so this is simple RSI bearish divergence. What it means is, this is price. Okay, this is price, and this is RSI. Okay, so according to the traditional definition of RS divergence, if the price, okay, if the if the price makes higher high, if the price makes higher high and RSI makes lower low, so this is, they call it as a bearish RSI bearish divergence. Okay, they call it as bearish divergence, and the technical analysis suggests that to take a short trade here. Okay, so that's what they say. Whenever you see a RSI bearish divergence, uh, they suggest to take a short trade. Very simple: price higher high, RSI lower high. It's called as RSI bearish divergence. They say take a short trade. But in my opinion, it fails 90% of the time, because whenever the market trends, it fails very, very terrible in a terrible manner. In fact, it should be ulta. I'm going to cover it. For example, this is one simple example. This is a TCS daily chart. If you see here, the price is in a strong uptrend, right? See here, the price made an higher high, right? See, you can check the definition, higher high. So price made an higher high, right? Now RSI made a lower high. That is a traditional definition. The RSI made a lower high. Let's say if you have taken a short trade here, you you might made a little profit, but at the end of the day, this move is really big, right? Okay, that's one thing. And here also, see here, price made an higher high, RSI made a lower high. If you would have taken a short trade somewhere here, see, it went into sideways, immediately bounced back. It's gone up, right? So if you would have taken a short trade on both the cases, you would have made loss, right? I know it fails very in a terrible manner. Now, this is one more example. This is a Bell daily chart. There are many, many examples. See here, here to here, there is price made higher high. This is swing high, this is on swing high, right? If you see a RSI made a lower high. If you would have taken a short trade here, you would have lost money. Once again, it made higher high here. Once again, it made lower high here. If you would have taken a short trade, you would have made loss. Once again, it made higher high here. Once again, it made a lower higher. If you have taken a short trade, at this point of time, you might made little profits, but the real profit is in this direction, right? The real trade is in this direction. So in my opinion, RSI fails very, very terrible manner. RSI bearish divergence, traditional divergence will fail in a terrible manner. I mean, you don't. It's not a rocket science, friends. See, for example, in uptrend, what happens is, on many times RSI makes a lower low because it makes a lower low. Okay, so you might see like this, but you might see the lower low like this. Okay, so in a strong uptrend, it will fail there many number of times. The only time it works is whenever the downtrend starts. Okay, whenever the downtrend starts, you might, for example, higher high here, maybe lower high here, assume this. lower here. So only during the reversal it will work, right? In all the cases, whenever the price is in uptrend, it will only gives losses, right? So only in reversal point it works fine. So why I'm explaining this is, this gives more number of failed trades, right? So it doesn't come under the safety factor which I explained a few minutes back. So this is not a good idea to implement in our trading system, whether you are an intraday trader or a BTST trader or swing trader or positional trader, short-term trader or scalper, whatever it may be. If you try to use this concept as it is in any time frame, maybe in 15-minute time frame, 5-minute time frame, 3-minute time frame, daily time frame, weekly time frame, it will fail in a trending market. That is for sure. Pakka, pakka, pakka. It works only during the reversal point. Whenever the market turns, reverses from uptrend to downtrend or downtrend to uptrend, it works only in such kind of scenarios. In all the remaining scenarios in a trending market, it will fail. That is for pakka. You can check. Don't trust my words. You can check 100 charts. You will realize it. Now, the exception I have already said, only during the market top, market bottom it works. So that's the only exception. It is fine. We'll move on. So the best way to use RSI is to use RSI hidden divergence. So what I'm trying to say is, it might be a little confusing at the beginning, but it's very simple. Okay, the price is in an uptrend. So instead of checking swing highs, we check swing lows. Okay, if the price makes higher low, and if the RSI makes lower low, so here this is a wonderful opportunity to take a long trade. I'm telling you in advance, friends. Okay, I'm telling you in advance. There is no free lunch in the market. There is no easy way to make money in the market. So this setup is very, very powerful. However, it is very rare to find this pattern. Okay, I'm telling you in advance. Okay, because this is a very high probability setup. The probability of getting success, making money with the setup is very, very high. That is the reason you don't get the setup every day. Okay, so you might get one or two setups. If you check maybe top 50 stocks in Nifty, you might get one setup or two setup, two in two stocks actually. Okay, you don't get more than that. So this demands time, maybe 30 minutes maximum. How much time you need to check 50 stocks? 30 minutes is more than enough, right? Maybe 50 minutes. Okay, let's say take 50 minutes. So 50 minutes is enough. Okay, after the market hours, not in the live market. Okay, maybe in the night, maybe in the evening, or maybe in the early morning. That 50 minutes, 1 hour is enough to shortlist the stocks, and only 5 minutes is needed to place the order, right? And place the stop loss order. How much time you need? You need only 5 minutes in the live market hours. So it's very simple. The price makes higher low, and RSI makes lower low. This is called as RSI hidden bullish divergence. Okay. So this has high success rate. Okay. So this is the overall funda. This is the overall concept. Now, as I said earlier, I don't use RSI as it is. I make couple of tweaks. The reason also I'll explain on the chart. For example, I will go to here. So I will go to some stocks actually. So that, because we will be discussing more about stocks only instead of index. So I will go towards past data. So I will plot RSI. I'll plot RSI, and here I will make couple of changes. Okay. So the first change is I will remove the middle band. It is not needed. Okay. Now the second settings I make is RSI 60. Instead of 70, I will make 60. Instead of 30, I will make 40. Why? Because again, 70-30 rule is defined for overbought and oversold scenario. Again, they have very less success rate. So whereas 60-40 is anything, if the RSI is above 60, we can consider it as bullish market. If the RSI is below 40, you can consider it as a bearish market. I'll explain. You can see here, for example, I'll change it. See, whenever the price trends on the upside, you can see here, right? So RSI will be above 60, right? Whenever the price trends downside, you can see RSI is below 40. Okay, so you can use this 40-60 rule, and I don't use this RSI as it is, because see here, little bit it will bring a lot of spikes. See here, let's say 40-60 rule I explained, right? If it is below 40, assume you're planning to take a short ride. See here, it went for just few, very quick, and gone up. Here also went very quick, gone above 60, come back. So whenever, if you use, it gives very sharp moves actually, if you use RSI as it is. So we don't need sharp moves, right? Because it can trigger unnecessary your trades, or it might, you know, advise you to exit the trade. Those kind of confusions will come into the picture. So that's why I don't use RSI as it is. I don't use RSI only, okay? I use RSI MA, okay? Moving average on top of the RSI. So instead of yellow, I'll place it black so that it is very clearly visible. Now one more thing is RSI MLN by default it will be 14. I don't need 14, 3 is enough, okay? Which means it will take the value of RSI last 3 candles, it will average it, and it will plot the line. That is more than enough for me. So please use this. If you don't get it, if you still not if you still don't get clarity why I'm doing this, please mention in the comments. I'll try to explain, or maybe I'll try to explain a detailed video on RSI as well, okay? So this is, see here, now it don't give those sharp moves below 60, below 40. Compared to earlier, the moves are very smooth, right? If you use 5, again it will be very very good, but 3 is more than enough. So once again, I don't need all these things. For example, overbought, oversold, we don't need all these things. These are all very basic, and it can misguide you, okay? So we don't need this. So this is how I use RSI. This is where I look for a hidden divergence. For example, if you try to spot hidden divergence, can you try to spot a hidden divergence here? For example, I will push this little downside, okay? So whenever you go to an uptrend, for example, if you go to an uptrend here, see here, there is an opportunity, right? Here to here, this is a higher high, right? Price made an higher high. See here, the RSI made little lower low, right? So this is a wonderful opportunity. If you have taken a trade, see, it's gone upside, right? The exit part, don't worry, I will cover in the end, but try to identify this thing. So as I said earlier, this comes very rarely, okay? You don't get this kind of setups every day. This is like a very precious, very important setup, okay? You should be happy if you don't get a setup, okay? Because it saves your money, right? But if you get a setup, you should be more happy, because there is a high probability of success, okay? So that is the beauty of this setup. So you just keep on searching here, here, here. For example, I might go to some other stock. For example, I will go to Titan, okay? If I go to Titan, if I look something in uptrend, uh, uptrend started from here. See here, there is one very good setup actually. See here, price made an higher high, RSI made an lower low. Is that clear? See here, from here it will be our entry, and the stop loss will be below lower than this. So very small risk. You can see how much movement it made. As I said earlier, we will exit whenever we get a very strong bearish indication. This is the strong bearish indication, so we can hold the trade like this, okay? So this is how it works. Now we'll go back to the presentation. uh, I hope you got the clarity about RSI settings. Some of the example, anyway, I've showed some of the examples already in live, but you can also see here price made an higher high, right? RSI made a lower low. So this will be entry, price went upside, right? Once again, it provided in a strong uptrend, you get many times, opportunities. So price made an higher high, higher low, RSI made a lower low, right? So this will be somewhere our entry. The entry, the candlestick confirmation, once again, I will cover after a few slides. But if you take an entry, it made the profit, right? Now one more trade example. This is in Bell. From here to here, price made an higher low, whereas RSI made a lower low, profitable. Once again, in this here to here, price made an higher low, RSI made a lower low, and it is profitable, right? Here we didn't get an entry actually. Now this is one more example, Trent Limited. From here to here, do you agree RSI made an higher low, and here I mean, the price made an higher low, RSI made a lower low, right? So once again, from here, it was an entry, price moved upside, right? Now, I don't want to go through with more example. You can find many more examples like this. You can find it on your own, okay? But I want to focus on couple of things. One is the candlestick confirmation part, and also I want to focus on the exit part, and also I want to focus on the money management part, because strategy is very easy. You will get these kind of strategies, a lot of good strategies in the YouTube or even in the books. But money management and exit techniques are very, very important, because only entry and exit decides the fate of your trade, irrespective of your educational qualification, reputation in the market, or experience in the market, right? Now, this is one more example. Tata Steel, price made an higher low, RSI made a lower low, then it went upside. Here also, price made an higher low, RSI made a lower low, price went upside. Here also, price made an higher low, RSI made a lower low, price went upside, right? Now, again, this is enough. Now, the confirmation part. Okay. Now, let's say price is an uptrend like this. Now, let's say you got signal. Okay. It made lower low here. So, sometimes what happens is it is better, okay, if you look for a bullish candlestick confirmation. Let's say you got a bullish candlestick confirmation from the price. So in that case, it increases the safety factor of the trade. Whenever you take the trade, only after seeing the RSI hidden divergence first confirmation, second parameter is some bullish candlestick confirmation. For example, here you will take a long trade, your stop loss will be below the low of this. Okay, you will hold the trade until it displays a strong bearish candlestick formation. Okay, so this increases the accuracy or success rate of your trade. Okay, and also it gives a proper price level to place your stop loss. That is why the confirmation is very, 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 very important. Now, what are the important patterns? Again, there are many, many, many candlestick patterns are there. However, whenever I talk about the candlestick patterns, I have seen many ads on Instagram or even in YouTube. They say thousand, not if not thousands, at least they show 20, 30 candlestick patterns, and they say, if you in this video or in this book or in this strategy, we cover all these 30 candlestick patterns. So my point is very, very simple, friends. There are thousands of candlestick patterns. Let's say we will take those 30 candlestick patterns only. So my point is it practically possible to study all the 30 candlestick patterns? Very difficult, right? Who will have patience in this current generation or in this current market condition? Definitely I don't have it. Okay, that's one point. My second question to you is, even if you study, okay, and remember all the 30 candlestick pattern, do you think is it possible to recall those candlestick patterns as it is in the live market or after few days? Definitely no, right? You end up making mistake. Okay, so my point is, pick only top 3, okay, or top 5 maximum. You should not go more than that. Top 3 is fine, top 3, top 5 is maximum. Okay, you study all the candlestick pattern, pick any top 3 candlestick patterns which are very powerful. That is one thing, and which occurs very, very frequently. Okay, if it is powerful, if it occurs once in 2 years, there is no use, right? But if it occurs every day but it is not powerful, then also it is useless. So you should pick top 3 candlestick patterns which are very powerful and also occurs in very frequently in the market conditions. So I have made your job very easy. Okay, for bullish patterns, these are the powerful patterns and they also occur very frequently. This is called as bullish engulfing. The first candle will be small bearish candle. The second is very big bullish candle which engulfs. Engulf means overlaps. Okay, the first candle, which means the price is in a no, you just assume, if you're looking for this pattern in a uptrend. For example, price is in uptrend. Now it is making a small pullback. In the small pullback, you got this first bearish candle. The next candle is big bullish candle, which means whatever the selling is created in this candle, it is absorbed by this candle, right? The buyers have absorbed the complete selling, and their participation pushed the price till here, right? So this is a solid, very solid bullish confirmation. So once you get this bullish engulfing pattern, you can take a trade, okay, long trade here, and stop loss you can place below this. Okay, so this is one such solid candlestick confirmation. Second one is bullish Marubozu. Okay, this is one candle pattern. So maybe like similar consolidation, if you get one big bullish Marubozu without any wick, there is no wick here, there is no wick here, it indicates the buy, there is buying is very strong here. It also indicates buying is very strong here, there are no sellers only. So whenever you get a bullish Marubozu also, you can plan to take a long trade above this level. You can keep a stop loss below this level. This is another solid confirmation. Okay, the third solid confirmation is I mean, it's called also called as hammer or bullish pin bar, something like that. So basically it involves a small body, a big buying week. Okay, the color doesn't matter even if you consider this candle. So only this much is selling power, right? Only this much is selling power. But if you look at the buying power, this is huge, right? The buying power is huge, which means, so in this particular candle, buyers are very, very strong, right? If it is green candle, it's very good, okay, which also indicates the close at the top. But even this candle is fine, okay, even though it is red, this is fine, okay. So this is called as hammer or bullish pin bar. So whenever you get this pattern, again you can take a long trade above the high of this, keep a stop loss below the low of these candles. So this is another candlestick pattern, confirmation pattern, to take a trade. Okay, I have made your job very, very easy, friends. I've given, instead of studying hundreds of candlestick pattern, I've already given three simple, candlestick patterns. Even if you're looking for a short trade, it is vice versa: bearish engulfing, bearish Marubozu, and bearish pin bar. Okay, bearish pin bar look this. If it is, this is a red candle, wick look like this. Okay, if it is also a green candle, it's okay. It wick look like this. Okay, so I have made your job very, very easy, friends. If you are watching till now, this is, I mean, I don't know, this information is precious. This is gold. Okay, so if you like this, please like the content. Please write a comment saying this is gold. Okay, now we'll go little further. See here. Okay, so now this is one trade opportunity, right? For example, see here, for example, here to here, for example, here to here, price made an higher high, right? RSI made a lower, this is higher low, this is lower low. See here, this is a bullish confirmation, right? Okay, so this doesn't come under exactly those three patterns, but it is very close to bullish Marubozu, right? See, after this gap, so price didn't go downside, right? It went upside. Okay, so you can plan to take a long trade above the high of this candle, keeping a stop loss below the low of this candle. So you will continue to hold the trade until you get a top three selling candles like bearish engulfing, bearish Marubozu, or bearish pin bar. So in this case, this is bearish engulfing, right? So here, this is a bearish engulfing. So whenever you get a bearish engulfing pattern, you close the trade. Now I'm also covering exit. Please keep this thing in your mind, okay? And also here also we got this. There is an entry here, right? So here also it made an lower low. See, if you consider this is a bullish pin bar, and also this is bullish harami. Actually, there is one more pattern. It's okay. It's called as bullish harami kind of thing. So once again, if you take a long trade here, keeping a stop loss below this, you will hold the trade until you get a bearish pattern. Okay. So I think here it is there. Even if you're not there, I think it's gone upside. It's fine, no problem. Okay. So now we will take one more example. This is also, I covered it in the past. If you see this, there is not here, not here. Okay, there is one opportunity here to here, here to here, right? See, if you see this is a bullish pin bar, right? Okay, so this is a bullish pin bar. So the entry comes above this, keeping a stop loss below this. So either you would have exited here, okay, or you would have exited somewhere here. This is a kind of strong bearish symbol, okay? So that's the one part. Now, the screener part, I get these kind of comments very, very often. How to shortlist the stocks, okay? So now there is no technology or a straightforward tool to shortlist RSI hidden bullish divergence, because that's very discretionary in nature, right? So there is no discretionary in nature. but definitely we need the bullish confirmation, right? Because the price is like this, and it should give a bullish confirmation, right? So this bullish confirmation results in positive movement, right? So if you go to money.rediff.com, okay, if you go to daily charts, you can select, or you can select Nifty. I will also go in the live and I will show it to you. Please do this after market hours, okay? Don't do it in live market, because in live market this will be keep on fluctuating, okay? So please do it in the offline market hours. Go there and check. You can check top 50, maybe top 10 or top 20 stocks. It will take hardly 5 minutes or 10 minutes, okay? Check whether this is farming or not. Our price is making higher low, RSI making lower low, okay? So check for this top 10 or top 20 stocks, okay? You will get it. If you are planning for a short trade, you can check the losers as well, but time being I'm explaining only for a retail traders who look for only long trade, okay? So this is one such tool, okay? This is one simple tool. The next tool is, if you go to, whenever you get a this kind of setup, the volume will be very very high, right? So you can also shortlist stocks through volume shockers. If you go to charting screener, there is a screener called as volume shockers, okay? So if you go to volume shockers, you will also can shortlist. For example, I will show it to you, okay? Why confusion? I will go here. For example, if you go to money.rediff.com, it's very simple. It's very straightforward to use. If you go to NSE, click on more gainers here. See, if you see here, Tata Consumer Product is there. I will sell. If you select top Nifty 50, if you check the top 10 or top 20 stocks, that's more than enough. Now, if you check Tata Consumer Product, right? If you go here, if you check Tata Consumer Product, it is here, right? Now, go to the recent part. See here, it's already giving a bullish move. So it doesn't come under RSI hidden divergence, right? So that's it. Now move on. For example, IndusInd Bank. Okay. So if you go to IndusInd Bank, click on this. Now, again, there is no RS. This is a daily chart. You should do it in daily chart, okay? Because this is swing trade setup. If your holding period is 1 week to 1 month, so here it is not there. So next, Zomato Titan. So I'll check, for example, Zomato, it is not there. Okay, Titan, it is not there. Okay, right now the market is in a sideways mode or a downside mode. We'll check Nifty. So that is the reason you're not getting the setup right now at this point of time. So, but don't worry, you know how to do it, right? Okay, you got an idea. So to check top 20 stocks or 25 stocks, it will take only maybe 5 minutes or maximum 10 minutes. Okay, so at least you will get 1 or 2 trades in a week. One trade is enough, which gives you, very good profits. So one more such screener is charting volume shockers. So if you Google like this, you will get this. Okay, friends, please note you should do it in aftermarket hours. Right now, I'm doing it in a live market, but you should do it in aftermarket hours. If you select run scan, it will shortlist all the stocks which received a high volume. Okay, see here it is showing in a high volume. See, if you just place a cursor on this, it will show in high volume. Okay, so Tata Consumer, for example, Central Bank of India. Go here, Tata Consumer, right? See, you go here and check like this. See, you know, like this, you can use this particular tool. Now, I hope you got an idea, right? Now, I'll go a little further because that's very, very important. Now, exit technique, okay? See, friends, there is no, the simple exit technique I suggest to you is, let's say you've taken a trade here, okay? So this will be your long trade and this will be your stop loss, okay? So the simple exit technique you can use is, if going up, it is fine. Whenever it displays an bearish engulfing or bearish Marubozu or a bearish pin bar like this, you can exit the trade or you can place the stop loss below this level. Okay, this is one simple exit technique under this strategy. This is one part. Now there are many traders who get lot of emotions a lot of disturbance in their mind to follow this exit technique. So what they can do is, let's say you have taken a trade here. Okay, this will be your long trader entry, this will be your stop loss. I'm just writing it down. Okay, so don't worry, let's assume there is a candle like this. Okay, you've taken a long trade here, stop loss is here. So now if you're not comfortable to hold the trade, so you can, if you can exit 50% of the position for 1 is to risk reward trade. Okay, so you can exit 50% of the trade position for 1 is to 2 risk reward or 1 is to 3 risk reward, and remaining position you can carry. Okay, and follow the same exit technique. I hope this is quite uh, beneficial, because after booking profit for 50%, even if the price gaps down or if it comes back, you will make some profits, right? Okay, so that is important exit technique. Please note, friend, this is very, very important exit technique. Now, money management rules. Okay, so this is also very, very important. Let's say if you have 1 lakh rupees, if you found a trade setup, you should not invest all the 1 lakh rupees for that particular trade, right? Because anything can happen in the market. Always remember, anything can happen in the market. If you have deployed all the 1 lakh rupees, what happens if that particular stop next day opens with a big gap down, 20% downside open? Okay, you lose, I don't know, maybe 25% of the capital, 50% of the capital, right? You lose more than that, at least 20% of the capital minimum. So I suggest to deploy only 10% of the capital per trade, which means if you have 1 lakh rupees, buy the shares only 10,000 rupees worth. So in this case, even if the price comes back and it's your stop loss, you will not lose more than 0.5% of the capital. Okay, overall capital 1 lakh. So even if the price suppose gaps down, it shows at 10% or 20% gap down open, you lose 1% or 2% or maximum 3% of the overall capital. So that is fine. This will help you to stay, survive, and continue in the market. That's very, very important. Okay, so if you are doing this in option selling, as I said earlier, you should know about options hedging. So I have made a separate videos on options hedging, or there are many videos about options hedging on the YouTube. You should take care of the options hedging part to cover the gap up or gap down risk. Okay, that's your risk. Okay, now with the equity, it is very, very straightforward. If you deploy only, not the risk I'm saying, okay, it is deploy. If you have 1 lakh rupees, you should deploy only 10, you should buy shares only 10,000 rupees worth. So in that case, even if the stock shows a 5%, 10% gap down open, you lose maximum only 1%, 3%, 1%, 3%, or maximum 4% of your entire portfolio. Okay, so that's how, that's all about money management, friends. I think we have reached the end, friends. I hope this video added value to your time. If yes, I would like to. I mean, please like my content, and you can share this video with your friends, and also subscribe to my channel. I would say. Go for a membership, because I'm making very, very useful information under the membership tab, very useful more than this. Okay, so you will get a lot of information about trading. I think that's all for today, friends. We will meet you with another video with another useful content. Until then, thank you. See you. Bye bye. Have a nice day.